Well, Bitcoin comes along and says, well, I can fix that. I've created this ledger, triple entry accounting. So we know exactly who owns the Bitcoin. And I can own it myself without any intermediate. That's what peer-to-peer means, right? In the old days, I want to send you money. I have to have a bank account. You have to have a bank account. I have to send you. I pay a fee. If it goes across international borders, I pay another fee to the Rothschilds, because of a treaty for like 400 years ago. It's ridiculous.
Yeah.
I mean, it's literally ridiculous that if I send money across international borders, I have to pay one of two banks because of a treaty from hundreds of years ago. That's ridiculous. I can send Bitcoin across borders instantaneously for free using Strike, or I could send you with a couple taps on my phone, Bitcoin, and it's peer-to-peer, no intermediary.
Mark Yusko of Morgan Creek Capital gives us a compelling update today, outlining his most recent prediction for Bitcoin and the reasons he thinks the market is about to undergo a historic change. The subsequent stage of the cryptocurrency boom is rapidly approaching and has the potential to surpass all previous ones, according to Yusko. His prediction is that Bitcoin and digital assets will soon be the focus of trillions of dollars in global capital as the floodgates of institutional money start to open. Yusko explains how even a tiny percentage allocation of just 1% from these enormous portfolios could spark a 5 times move in Bitcoin's price, pushing it toward the $150,000 mark and setting off a chain reaction throughout the entire crypto space as major players like BlackRock, Fidelity, and sovereign wealth funds line up. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
And then if you think about building a portfolio, you actually want to embrace volatility. In fact, I have a shirt that says "Embrace Volatility" with Bitcoin on it. And what's interesting about Bitcoin in particular as a portfolio diversifier is it's highly volatile because there's a lot of uncertainty across the masses on the future, right? Yesterday I retweeted something said, Bitcoin going to zero since 2009.
Correct.
Right? There are people that still believe. It's hard for me to fathom, actually. There's people still believe to this day that, it's a Ponzi scheme, it's a fad, it's going back to zero. Well, it's never going to zero for lots of different reasons. And the likelihood is this volatility that has been around 80-ish, which, by the way, is the same as Amazon stock, which we can come back to at some point, is probably going to decline over time as more people become convinced that this is the future of money. But the best thing about it is volatility is one measure of an asset in your portfolio, but another is correlation to the other assets. If you think about it, if I own bonds, super risky strategy, actually. Oh, no, Mark, there's no volatility. Well, right. But then you get chewed up by inflation, so you get less rich. That's pretty risky.
Correct.
So if I had equities, which on the surface seem riskier because they have higher volatility, but they're uncorrelated to bonds, the risk of my portfolio actually goes down. That's what Markowitz, won the Nobel Prize for. And when you add Bitcoin, which is highly volatile, but uncorrelated to bonds and uncorrelated to stocks, it's 0.0 correlated to bonds and 0.15 correlated to stocks, your whole portfolio volatility actually goes down. And no, that's not possible. What is. Now, that doesn't mean every day, every minute, but alongside of that maturation of the market or institutionalization of the market. So now we have futures and we have options. And when the financialization of a commodity, now this is one of the be careful what you ask for things. Remember the whole argument about, Bitcoin's not a security. And we love that they called it a commodity. Do ya? Think about it. Why do you want it to be a commodity? Oh, because it's taxed better and then it won't be, crushed by the SEC. Okay, but think about it. Commodities, like gold, wheat, corn, oil, do they have high volatility or low volatility? Well, they kind of have high volatility. And can those markets be manipulated by the big institutions? Think about gold. Gold has been manipulated. And I love the fact JP Morgan got caught, right? Red-handed, caught manipulating the gold market, paid $1 billion, well, it's $960 million. So almost $1 billion fine. And they're like, without admitting wrongdoing. I love that part. didn't do anything wrong, but we're paying this $1 billion fine. And the guy said, well, look, it's just a cost of doing business. We made 20 billion. We pay 1. That's not bad.
Good business.
5%. Now, you shouldn't have been doing that. That's against the law, but they do, and they get away with it. And so the same thing happened, and it's not really talked about, but in 2017, Leo Melamed, who's the chairman or president, I can't remember, of Chicago Mercantile Exchange, made a very interesting comment that he said, oh, we'll tame Bitcoin. Like tame, that's an interesting word, right? Why does it need to be tamed? And who are you to tame it? Well, if you go back to 2018, the price went from 10,000 to 20,000 in about 6 weeks post Thanksgiving into the second week of December. And then it crashed, right? We went in a big crash, and by middle of 2019, it was all the way down at 3,200, or end of 2019, down to 3,200. Well, interestingly, literally on the day, December 18th of the peak, the CME issued new futures.
Yeah.
Well, what does that mean? Well, a future allows a big institution to go naked short. Now, you're not supposed to do that, but again, rules are for other people, not the institutions. And so they can go naked short and put pressure, because if you're an institution and you want to buy something, you don't tell everybody how great it is. You tell everyone how it sucks and how you hate it, and then you sell it in the futures market and you push the price down so you can go accumulate at a lower price. I mean, the big hedge fund guys used to do this all the time. Julian Robertson, George Soros.
According to Mark Yusko, Bitcoin's adventure is just getting started. The real momentum is just getting started, he says, likening the last few years to a warm-up. Now that big companies like BlackRock are joining the market, Yusko anticipates a surge of institutional investment that will fundamentally alter the cryptocurrency market. He claims that, similar to past bull runs, this influx of capital will drive Bitcoin's price significantly higher. He considers this to be a significant change in the financial industry. It is becoming evident that cryptocurrency is acquiring significant credibility as more governments, organizations, and media outlets begin to acknowledge and accept Bitcoin. Yusko claims that cryptocurrency is on course to surpass all other asset classes in terms of performance. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
So fast forward to 2021, the price peaks again, and what happens? The CME issues more futures. So right as you get the approval of the ETFs, suddenly people can go short against the box. So I love when the 13Fs come out. Everybody's like, oh, look, Millennium owns $2 billion of Bitcoin because they own
It's to cover their shorts.
No, they don't. They don't own $2 billion. They are short at least $2 billion, maybe even a little more sometimes, but mostly they're market neutral. But they're short in the futures market. So as the futures market has evolved, that volatility that should be going down, to your point, actually keeps rising. So there's always method to the madness, right? There was a reason that they deemed it not a security and it's a commodity. That wasn't by accident. That wasn't so they could ignore it. It was so they could financialize it and control it, tame it, traditional finance. There's DeFi, which is the future, decentralized finance. But in the middle, there's this thing, rocky road, called CeFi, centralized finance. And it's there's a process. So there are absolutely people who are all the way over here in DeFi. They are self-sovereign, be your own bank. They own their keys, their coins. They're on, a hard drive or whatever. I mean, I know a ledger or whatever. Yeah. And that's great. Now, we all know people lose their password, they lose their seed phrase, they have a boating accident, whatever it is. And so it's a bearer asset. Bearer assets have unique risks. And so you think about money. In the old days, money was, I had chickens and you had cows. Yeah. That was our wealth. And we would come to the market and we would trade those physical animals. And that's how we did it, was barter. And they were like, that's stupid and it's messy. So I'm going to bring these little coins with chickens on them, and you're going to bring these coins with cows on them, and we'll trade the coins. Well, but those sacks of coins were heavy, and on the way home, the robbers came and knocked us over the head and took the coins. So we put the coins in the bank.
Yeah.
Now we have these IOUs, these pieces of paper that we could trade. So then we electronified, right? We made QSIPs, ones and zeros in our bank accounts, and we would trade the QSIPs and we would trade the bank account ledger numbers. And that was a better system. But the problem was it was centralized and traditional in the sense that you put your money in the bank, it's now the bank's money. Put your money in a brokerage firm, it's now the brokerage firm's money. It's not yours. And you have an IOU and it works most of the time, but it's not yours. You're not self-sovereign. Well, Bitcoin comes along and says, well, I can fix that. I've created this ledger, triple entry accounting. So we know exactly who owns the Bitcoin. And I can own it myself without any intermediate. That's what peer-to-peer means, right? In the old days, I want to send you money. I have to have a bank account. You have to have a bank account. I have to send you. I pay a fee. If it goes across international borders, I pay another fee to the Rothschilds, because of a treaty for like 400 years ago. It's ridiculous.
Yeah.
I mean, it's literally ridiculous that if I send money across international borders, I have to pay one of two banks because of a treaty from hundreds of years ago. That's ridiculous. I can send Bitcoin across borders instantaneously for free using Strike, or I could send you with a couple taps on my phone, Bitcoin, and it's peer-to-peer, no intermediary.
As we wrap up this video, Mark Yusko's observations serve as a reminder of a larger picture that many investors tend to ignore. Despite its volatility, Bitcoin has shown itself to be a valuable instrument for diversifying a portfolio as well as a digital currency. Although its volatility may initially seem frightening, long-term investors find it to be extremely useful due to its independence from more conventional markets like equities and bonds. Even award-winning financial theories support the idea that adding Bitcoin to a portfolio can actually lower overall risk rather than raise it. However, Yusko also gives us a crucial warning. Bitcoin is more susceptible to the same manipulation that has beset more conventional commodities like gold as it gets more financialized through futures, exchange-traded funds, and other Wall Street products. He demonstrates how big organizations frequently utilize these technologies to temporarily lower costs so they can stealthily and affordably acquire more assets. This indicates that the erratic fluctuations in the price of Bitcoin are frequently the consequence of calculated actions taken by influential parties behind the scenes rather than being caused by changes in macroeconomic conditions or retail demand. Therefore, even while Bitcoin's future is promising and full of possibilities, it is also complicated. Yusko's advice to those who are listening is clear. Don't let temporary price fluctuations divert you. Instead, learn the rules of the game and take a long-term strategic stance. Since Bitcoin is ultimately a component of a financial revolution that is still in its infancy, it is more than just an investment. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.